Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribing, liking, and commenting underneath.
It really helps the channel grow.
It really does. So I want you to picture a scenario, one that we have definitely all experienced at one point or another. You're driving down this really remote stretch of highway, miles from the nearest town.
Or maybe you're out hiking, a bit further off the trail than usual.
Exactly. And you reach into your pocket because you need to make a quick call or just check a map to make sure you're not totally lost. You look down at your screen, and there it is.
Oh, the dreaded no service indicator.
A complete and total dead zone. Now, I want you to imagine a world where you never lose cell service again, anywhere on the face of the earth.
Which sounds impossible.
It does. And the best part is you don't even need to buy some bulky, incredibly expensive satellite phone. You don't need a special dish bolted to the roof of your car. You just use the exact same completely unmodified smartphone you already have in your pocket right now.
I mean, it sounds like pure science fiction, honestly.
Yeah.
But it's actually the very real, very aggressive ambition of the company we're analyzing today, AST SpaceMobile.
That is the premise we are unpacking today. We've gone through a massive stack of recent financial documents, strategic market analyses, and industry news to figure out if this is actually viable.
And how they're trying to completely revolutionize global connectivity.
Exactly. We're going to break down the massive technological moat they're building in space. We're also going to contrast their staggering future revenue projections with their current, somewhat terrifying pre-revenue reality.
Very terrifying.
And finally, we will analyze why the United States military has suddenly taken a very expensive interest in what they're building.
It's a huge pivot.
So let's unpack this. What exactly makes AST SpaceMobile different from the other satellite internet providers that are already up there?
Well, the core differentiator here, the thing that really separates them from the entire pack, is what the telecom industry is calling the direct-to-smartphone revolution.
Right.
If you look at major competitors in the space internet sector right now, take Starlink, for example, they provide incredible global coverage.
They really do.
But there's a catch. They require the user to have special receiving hardware. You need a physical terminal or a specialized satellite dish to catch that signal from space and then convert it into a local Wi-Fi network for your laptop or your phone.
Right, like you can't just point an iPhone at a Starlink satellite and get a connection.
Exactly.
The phone's internal antenna just isn't powerful enough.
Precisely. AST SpaceMobile is trying to completely bypass that hardware requirement. Their network is designed to connect directly to the standard unmodified smartphone you already own.
No new equipment.
None. The satellite essentially acts like a regular terrestrial cell tower, just one that happens to be floating in low Earth orbit, and that orbit part is crucial.
Because of the distance.
Yes. Low Earth orbit, or LEO, is relatively close to the planet, usually a few hundred miles up. You have to be that close if you want to pick up the incredibly faint radio signal being broadcast by a standard cell phone.
But even in low Earth orbit, picking up a cell phone signal from hundreds of miles away requires some intense hardware.
Oh, absolutely.
There was a detail about their Block 2 Bluebird satellites in the data that I genuinely had to read twice, just to make sure I wasn't misunderstanding the math.
The size of them.
Yes. These satellites feature phased array antennas that are 2,400 square feet in size.
It's massive.
Let me put that into perspective for you. Think about a sprawling 4-bedroom suburban home. Now imagine taking the entire footprint of that house, flattening it out into a giant metallic square, folding it up into a rocket, and launching it into orbit to travel at thousands of miles an hour.
It is a phenomenal engineering feat. And to understand why it has to be so massive, we have to look at that term you just mentioned, phased array.
Right. What does that actually mean?
Yeah. Instead of a traditional curved satellite dish that has to physically turn and point to track a target, a phased array is essentially a giant grid. It's made up of thousands of tiny digital antennas.
Okay.
By slightly delaying the signal between all those tiny nodes, they can electronically steer the beam without any moving parts.
So it's totally static, but it directs the signal digitally.
Exactly. But because a cell phone signal from the ground is so weak, that grid has to be absolutely massive to catch it. They are essentially building the largest commercial ear ever placed in low Earth orbit.
Okay, so they are putting suburban house-sized antennas into space. But if this is such a game-changing idea, what is stopping a giant competitor from just doing the exact same thing?
What's fascinating here is how they are protecting that massive hardware investment. You don't just figure out how to unfold a 2,400 square foot space antenna and hope nobody copies your homework.
Right, you'd want to lock on that.
AST SpaceMobile has built an absolute fortress of intellectual property. The strategic analysis notes that their technology is currently protected by over 3,500 patents and patent-pending claims.
3,500. That is an absurd number of patents for one system.
It creates an incredibly high barrier to entry. If a competitor wants to replicate this direct-to-unmodified phone model, they aren't just facing the physical engineering challenge of building a giant phased array.
They have to navigate a legal minefield.
A labyrinth of 3,500 legal claims. You can imagine a rival aerospace company trying to build a competing satellite, only to realize that AST SpaceMobile holds a patent on the specific way a hinge folds.
Or the software algorithm that manages the signal delay.
Exactly. It's a defensive moat designed to lock out well-funded competitors like Globalstar or even Starlink from easily pivoting to this exact same architectural model.
So we have a company building space infrastructure the size of real estate, protected by an impenetrable wall of patents. That sounds incredibly expensive.
It is extreme.
And this brings us right back down to earth, to the stark financial reality. We are looking at a company that is essentially pre-revenue. I want to talk about their trailing 12-month revenue, their TTM.
The actual cash they brought in?
Right. A look back at the actual cash generated over the last year. That number is exactly 7 cents, not $7 million, not $700,000, $0.07.
It is a jarring figure, without a doubt. And it highlights that AST SpaceMobile is entirely in a developmental stage.
Right.
They are focused 100% on building out this massive satellite constellation. Operating with a trailing revenue of just 7 pennies means they are sustaining deep operating losses.
The burn rate has to be insane.
When we look at their financials, there is zero meaningful free cash flow. Just to translate that for anyone who isn't a Wall Street analyst, free cash flow is the money a company is left over after paying for its operating expenses and capital expenditures.
And in AST's case,
because building and launching the largest commercial antennas in orbit is so capital intensive, way more money is flying out the door than coming in. Their cash burn rate is exceptionally high.
let me push back on this a little bit because this seems like a massive red flag.
Hmm.
If you are an investor or just someone analyzing the viability of this company, how do they survive that kind of cash burn?
Hmm.
How long can you keep launching rockets when your revenue wouldn't even buy a stick of gum?
That is the primary risk hovering over the entire operation. Because they are reinvesting every available dollar into satellite deployment, they have to continually find new ways to pay the bills.
So they have to raise capital.
Yes. They will likely need to rely heavily on equity raises to fund their path to full commercialization.
And for current shareholders, that introduces the dreaded dilution risk.
Exactly. Think of the company's total value like a pizza. If you own a slice and the company suddenly needs to raise a ton of cash to launch another satellite, they create new shares.
Essentially cutting that same pizza into more and more slices.
Right, so your specific slice gets smaller and less valuable. We should also note that there's been some insider selling recently.
Oof.
Yeah. When executives are selling their own shares while the company desperately needs capital and faces these dilution risks, the broader market definitely takes notice. It chips away at investor confidence.
But then you look at the forward-looking financial analysis, and the numbers are dizzying. Analysts see this current 7 cents turning into $1.9 billion in revenue by fiscal year 2028.
And it doesn't stop there.
Right, then they project to jump into $3.1 billion by fiscal year 2029. Wait, hold on. They're making 7 pennies right now. How do you magically conjure $3 billion out of thin air in just 3 years? That feels like a massive leap of faith.
It does sound like magic, but there is actually a very specific operational threshold that triggers that revenue. The key to the lock is scaling the constellation to a critical mass.
Meaning a specific number of satellites.
Exactly. The magic number, mathematically, is between 45 and 60 satellites. If AST SpaceMobile can successfully get 45 to 60 of these massive bluebirds operational in orbit, they achieve continuous, reliable network scale.
And when is that supposed to happen?
The target date for hitting that critical mass is 2026. The moment that network goes live on a meaningful global scale, that is when the switch is flipped. And those billions in projected revenue are theoretically supposed to start flowing.
And to be fair, they aren't planning to go out and acquire $3 billion worth of individual customers one by one. They already have the partners lined up waiting for that switch to flip.
Major players.
They have memorandums of understanding MOUs with some of the biggest telecom titans on the planet. We're talking AT&T, Verizon, and Vodafone.
The scale of that is hard to overstate.
To give you a sense of it, these partnerships cover roughly 3 billion subscribers globally. That's nearly half the population of the planet. And these agreements include locked-in revenue splits.
If we connect this to the bigger picture, those telecom partnerships are the engine for massive network effects. You, as a consumer, wouldn't necessarily know you are using AST SpaceMobile's infrastructure.
Right. I'm not signing up for AST Mobile.
You wouldn't download a special app. Your standard AT&T or Verizon phone would just seamlessly hand off its connection to the satellite the moment you drive out of range of a normal ground-based cell tower.
So the switching costs for the consumer are zero.
Which is brilliant. But as massive as those commercial telecom partnerships are, there is a pivot happening right now that changes the entire complexion of the company.
Here is where it gets really interesting. The financial documents outline a major recent shift. It is not just commercial telecom backing this anymore. It is the Pentagon.
A massive development.
The U.S. Space Development Agency, or the SDA, just handed AST SpaceMobile a $30 million prime contract. This is under a defense program called Halo Europa.
As it's not their first one.
Right. This sits right on top of a prior $43 million award they already received from the SDA. So you have a company with 7 cents of trailing commercial revenue suddenly pulling in $73 million in U.S. government defense contracts.
That defense pivot is arguably the most significant development in the company's history so far. Why would the Pentagon want this? Think about modern military operations.
Communication is everything.
Exactly. Ground infrastructure like physical cell towers or massive communication dishes are vulnerable. They are fixed targets. If a soldier in a remote or hostile environment can communicate securely using a standard low-profile device that connects directly to a satellite 300 miles above them, that is a massive tactical advantage.
It validates what the industry calls dual-use technology, right?
Exactly. It proves that these giant phased array antennas aren't just a novelty for letting hikers send a text message from a remote trail. They have profound strategic applications for national security and military logistics.
It's not just a commercial play anymore.
The Halo Europa contract is a massive stamp of approval from the highest levels of the U.S. defense apparatus.
And the market definitely noticed when that $30 million check cleared. When the SDA contract was announced, shares jumped significantly. The financial reporting describes the stock trading higher with breakout momentum and a shift to new highs amid early year strength.
It was a clear catalyst.
You see elevated trading volume, positive institutional flow, and rising interest from major funds. It feels like the market was sitting on its hands, waiting for someone to prove this technology actually works in the real world outside of a lab.
Yeah.
And the Pentagon stepped up and said, we believe in the physics enough to fund it.
From a purely financial perspective, those government contracts are a lifeline. They provide critical short-term cash liquidity to help offset that massive cash burn we discussed earlier.
So it buys them time.
It reduces the immediate need for punishing share dilution. But more importantly, as you mentioned, they provide absolute credibility. Institutional investors see defense validation as a massive de-risking event.
Makes sense.
If the U.S. military trusts the technology, Wall Street feels a lot more comfortable putting capital behind it.
But it's not all breakout momentum and billion-dollar projections. We have to look at the other side of the equation. Space is famously unforgiving. What is the bear case here? What could go wrong that derails this entire timeline?
The primary risks all circle back to the harsh realities of aerospace execution and that ticking financial clock. The single biggest risk is execution delays.
Getting things off the ground.
Launching something the size of a house into orbit is incredibly complex. If a rocket is grounded, if there's an anomaly during the unfolding sequence in a vacuum, the whole timeline shifts. The analysis specifically notes that their first quarter launch targets could be at risk.
And if they don't hit those targets, the dominoes start falling.
Precisely. If they can't get to that magic number of 45 to 60 satellites on schedule, they can't unlock the commercial services.
And no commercial services means
They can't move past that 7 cents of revenue. And if revenue stalls while they are still building satellites, the cash burn continues. Which brings us right back to the threat of running out of money and facing brutal shareholder dilution just to keep the lights on.
There's also a heavy dependency on their partners that we need to acknowledge. While they have these massive agreements with AT&T and Verizon, the market data points out a specific, noticeable silence from Vodafone recently.
Which is concerning.
When you are betting your entire future commercial model on revenue splits with telecom giants, you need those partners to be visibly, aggressively moving forward with you. Silence makes investors nervous.
And all of these conflicting factors, the revolutionary tech versus the terrifying cash burn, are perfectly reflected in the current market sentiment.
Right, let's look at the quantitative sentiment scoring. For anyone unfamiliar, this is basically an algorithmic vibe check. Software scans all the top financial news stories, analyst reports, and market data to see if the overall mood around a stock is positive or negative.
And where does AST sit?
Right now, despite the Pentagon contracts and the patent mode, AST SpaceMobile's sentiment score is listed as neutral, with a flat score of 0.
It is a true tug of war. You have news flows calling the technology revolutionary, and you have shares jumping on defense contracts. But the market is absolutely terrified of the high valuation and the looming dilution fears.
They want proof.
Investors are completely torn, making them incredibly cautious about fully buying into the narrative until the hardware is actually functioning in orbit.
And that timeline is closing in fast. We're looking at some immediate catalysts that could tip the scales one way or the other. The inaugural launch of the Bluebird 7 encapsulation on the New Glenn mission is imminent.
The stakes are incredibly high for that launch.
Every successful launch proves they can navigate the physics. Every delay fuels the bear case.
And speaking of immediate catalysts, the calendar is forcing their hand. Today is March 1st, 2026. Tomorrow, March 2nd, 2026, is a massive day for AST SpaceMobile. They are scheduled to host their Q4 business update call.
The financial briefs literally frame this upcoming earnings preview as a make-or-break moment. They can't just talk about patents tomorrow. They had to get on that call and prove tangible progress.
They need hard data.
They have to show the market that the 45 to 60 satellite constellation is on track, that the cash burn is under control, and that partners like Vodafone are still fully committed to the launch sequence.
It is the ultimate test of their corporate narrative. Can they bridge the gap between their 3,500 patent technological moat and their immediate, very pressing financial reality?
Tomorrow will be very telling.
Tomorrow's call will likely dictate whether that neutral sentiment score swings hard to the bullish side or plummets to the bearish side.
So what does this all mean? Let's bring this all together. The final investment thesis from the strategic analysis gives AST SpaceMobile an 8 out of 10 bullish score, framing it as a multi-year hold target.
That's a strong long-term conviction.
On one hand, you have a 3,500 patent defensive moat, telecom partnerships covering 3 billion people, and game-changing technology that could literally eliminate the concept of a dead zone from human existence.
The upside is massive.
On the other hand, it is a high-stakes, capital-intensive race against time. They have to navigate execution delays and massive cash burn to get those giant satellites into orbit before the money simply runs out.
This raises an important question, one that goes far beyond just the stock price or the physics of phased array antennas. We talked about how these satellites are categorized as dual use.
Meaning they serve both everyday commercial consumers and the military.
Exactly. If the infrastructure that connects our personal smartphones is increasingly funded by and dual-purposed for the military and the Pentagon's defense programs, where exactly does commercial telecom end and national security surveillance begin?
That's a heavy thought.
As space becomes the new cell tower, who truly holds the keys to our connectivity?
That is definitely something to chew on the next time you look down at the signal bars on your phone screen. Thank you so much for tuning into today's talk. We always encourage you to keep questioning the world around you, and we'll catch you on the next one.